Hey everybody, Tom here. When it comes to stock splits, the first thing you need to know is that you may have more shares, you just won't own them at the same price you did before the split. So when a stock actually splits, I want you to think about this. Along with the amount of the split becomes a split adjusted price. It's called the split ratio. Think of it as like change for a dollar. If I give you a dollar and you give me 4/4, what have we done? We've moved one piece of money over for 4 pieces of money, but it's still worth the same thing. It's like a 4-for-1 split. And it's just like the 10-for-1 split with NVDA. You know, when NVIDIA opens from trading at one price one day to being down so much the next day because of the split, keep in mind it's like changing a dollar. Let me just show you what was going on. So last week, here's a chart of NVIDIA trading around $1,250 a share before the split. And here it is once again with the price after split. Now, these charts look exactly the same. The big differences you're going to see are the prices on the left because the chart's the same, and so is the red line. That's the line of implied volatility. But, oh, wait a minute. Is it? No, it actually got a little bit lower. I'm going to talk about that in just a moment. Until now, if you did not understand stock splits and you thought you were going to get a huge windfall, now you know better. But you know what? There is a good thing that comes with a stock like NVIDIA with stock splits. And what that means is that there's a pattern that goes on with so many good stocks that it's not about today. It's about in the future when many of these stocks go back up to their pre-split price. That's when you see that big increase on your money. Granted, you didn't sell any shares before that happens. Now, there's many reasons that a company does a split. I'm not here to educate you on that or speculate on what NVIDIA is going to do because of this. But my thing for stock splits is from an investment perspective. Over time, like I said before, stock splits tend to regain the pre-split price, and that helps your account grow over time. Now, when a stock splits, the options typically split as well. Let me show you what happened to NVIDIA last week versus this week. So here is a chart or an image of the at-the-money call options on NVIDIA. I put them in green down there near the bottom. And you can see the 12-10 calls and you can see the 12-20 calls. Now they're trading between, let's call it 46 to 51 points for those at-the-money call options. Yeah, I mean, you were paying 46 to 51 points to have the right to buy NVIDIA at 1,210 or 1,220. And so while that was some really big prices, remember, they were based on some huge strike prices. Let's fast forward to this week and see how those options adjusted post-split. Here's your new image. So quite a difference because you look at the at-the-monies, which are just below and just above the strike price. Now we're looking at the 125 calls and the 126 calls. Same expiration date, June 21st. But look at the premiums, 308 to 360. All right. Now, you might already be thinking something doesn't smell right here because if I multiply these times 10 and try to go back to before split, that comes out around $30 to $36. How come they're not closer to the $46 to $51 in the previous range, Tom? Well, first, there's still June 21st options. So last week, we had 3 weeks to expiration on those June 21st options. And this week, we have what, about a week and a half? So we've lost almost half the value on them since then. That's one reason. Here's another one. It's called implied volatility. I want to show you one more graph on this video. This is the IV on NVIDIA. Now, yes, those spikes were earnings, but look what's happened here in the last couple of weeks. This thing is tending to go down to close to 40 on that IV chart. Okay, it's dropping. Premiums are falling. Traders are expecting lower movement in the stock, which also means that there's cheaper option premiums as well. The $1,000,000 question you should be asking yourself here is, how do I make money on stock splits as an option trader? Well, there's 3 ways to do it. Or really, there's 3 ways why stock splits could cause an increase in stock price. Number 1, on the announcement of stock split, that could be a catalyst right there alone for the stock price to increase as people hear about the split. Number 2, going into the split, people who haven't bought shares yet might want to add to their stake before split. And then, of course, after the split, now it looks like the stock's trading at a bargain. And some folks who didn't think they could afford it then can now afford the stock. In all these cases, the stock tends to rise in price, meaning it could be a bullish strategy, and sometimes as simple as using a call option. There you go, folks. Hope you enjoyed it. Post your comments. I'll see you on the next one. Bye now.